Hello, everybody. I'm Sebastian from the Investor Relations team of Carl Zeiss Meditec, and I look forward to giving you a very brief intro into our company and our exciting equity story. Our company is a 2 billion revenue medtech firm that is specialized in the two areas of ophthalmology and microsurgery. We are 59% owned by the Carl Zeiss Group itself, an optics powerhouse and a deep innovator in all kinds of optical technologies, and we concentrate the medical business activities of the Zeiss Group within Carl Zeiss Meditec. The company in its independent form as a spin-off out of Carl Zeiss has been created in 2002, and the structure has been pretty much steady since then. Our two main markets are ophthalmology and microsurgery. To start with ophthalmology, we did evolve from starting out as a chronic disease management, or you could also say diagnostic imaging company, which still continues to be one of our key segments in this market, moving on with some innovation into refractive laser surgery, which has been the biggest growth driver in the past years. Refractive is the way to get rid of glasses or contact lenses through the means of corneal surgery, to move into the area of surgery anterior, or as some of our competitors are calling it, cataract products, where the main application or the main treatment is the taking care of cataracts that often develop at a later age in life, when patients are often 60 or 70 years old, as opposed to refractive surgery, which is more typically done for younger people. And lastly, the surgery posterior segment, which we have recently strengthened through an acquisition, where we deal with retinal issues, for example, retinal detachments that can often happen in the case of people suffering from diabetes or high blood pressure. The other two segments, or the other segment responsible for a quarter of our revenue roughly, is microsurgery. In microsurgery, we are mainly specialized on neurosurgical and spinal surgical applications, where you need very good visualization, but you also need a lot of sophisticated intraoperative diagnostic features. There's a small business with radiotherapy included into this neuro area. And then also we have some solutions, visualization systems and microscopes for ENT surgery, for plastic and reconstructive surgery, as well as for dentists who are using microscopes increasingly for treating things such as root canals. Zeiss, across its board, has very good market positions. We have the leading market share in two categories on the left of this chart. That's in microsurgery, as well as in the refractive laser part of ophthalmology, with 60 and respectively 40%. Here we are the biggest players in that field. We remain among the biggest firms in chronic disease management in the diagnostic imaging segment. We are basically, together with Topcon, the Japanese company that's about the same size, leading that market, and the innovation leader when it comes to software and digitalization and use of diagnostic data, as well as in the retinal surgery segment on the bottom right, where we have a 15% market share, meaning the number 2 position behind Alcon in this global market, which only is served by a few specialized players. In the center at the bottom, we have the large and somewhat more competitive surgery anterior segment, the cataract segment, where Alcon is the market leader and Zeiss here only has an 8% market share. But importantly, this market share has grown over the past decade, and we are targeting more ambitious, eventually clearly double-digit market shares, as we have introduced products for new categories. We're still not fully rolled out across the globe, still very early days in the US, not yet present in Japan with some of our products. So here there's still both geographic as well as innovation growth options ahead of us. And hopefully these will lead for us to market share gains in the future on the back of the innovation that we deliver into these markets. Our current geographic presence is well spread out, but does have a focus on Asia Pacific. The reason for that is clear. Asia Pacific is the market that has the most pressing need for ophthalmic solutions, both for the young who suffer overproportionately from myopia, as well as particularly in China, the old, where you have a very large population in China that's aging very quickly due to some of the politics around the one-child policy and its long-term consequences. You have an aging population with all the elements of civilization disease, leading to a whole host of eye problems. And our products, as well as our very strong brand in many Asian countries, particularly in countries like China, Korea, and Japan, helps us capture good shares in the premium segments in these markets. As the middle class is acquiring more consumer power, then particularly the elective surgical options, these are markets where the Zeiss brand shines along with our innovation. India and Southeast Asia are very important growth areas for us for the future, and we're investing heavily into these markets. But even in the mature markets like in Germany and France and Europe and also in the US, which is the second largest market, some of our category revenues are still not where we would like them to be in the long term. We have a lot of growth options, for example, from completing our portfolio, from building more recurring revenue. And talking about recurring revenue, just to give you a KPI on that, our recurring business has undergone a very strong transformation from just about 9% of sales being recurring 20 years ago when Meditec was created to now almost half of the business, to be precise, 47% of the business coming from recurring sources. This gives us better margins, it gives us better predictability, less dependence on the budgeting decisions of customers and the funding environment that customers are constrained to. Recurring revenue is a very critical KPI for us. We achieve it through services, through software, through consumables and disposables that are used mainly in the surgical applications that we offer across our business. And that will continue to grow and eventually reach a majority of our business in the next years. One topic that I should single out is myopia. As has been mentioned in the context of refractive laser treatment, there is really something that we might call a myopia pandemic around the globe due to lifestyle factors and also exacerbated by some factors is impacting certain regions heavier than others, particularly APAC. We have rising and already very terrible rates of myopia, particularly among the young. The myopia rate in the general Asian population is more than half already, and it will rise further to 2/3 of the population. On the chart on the left-hand side, you see that the world population will have a myopia rate of closely to 50% in 2050. Every second person will have a theoretical need for glasses, for contact lenses. And the refractive solutions that we offer that give you freedom from glasses or contact lenses are a tremendous improvement for the quality of life, available at high safety. It's the safest surgical procedure compared with minimal complication rates that can be, through sophisticated diagnostics, can be almost completely ruled out. It has great benefits for the quality of life at a very affordable cost. It's somewhat of an undiscovered secret, the many benefits it can give. We have a portfolio of solutions for young people in their 20s and 30s, as well as for middle-aged people in their 40s and 50s with emerging presbyopia, and then the elderly age group from 60, 70 onwards, which has a combination typically of presbyopia and emerging cataract and other eye issues. We also have a significant portfolio of refractive solutions available. And as lifestyle habits are driving higher myopia prevalence, particularly among academics, which here is referenced as the high income cohort, where the learn and study environments, the high use of digital devices is even worse than in the general population. This should bode well for strong demand growth in our main markets in the future. Zeiss has the most complete portfolio, both of diagnostic and surgical solutions, compared to some of our peers, which are depicted here. There is nobody who is present in all ophthalmology categories. Most of the companies have either a focus on diagnostics or on surgical applications, and this puts us into a beautiful spot to provide integrated offerings. Integrated offerings typically start with the device as an anchor product. Then a workplace is created by connecting several devices and adding instruments and disposables. And lastly, we can also add our software architecture to the setup and achieve what we call the workflow. Then we're really at the goal where we want to be with the customer presence, where an entire procedure, an entire clinical workflow can be dealt with Zeiss products, Zeiss software, Zeiss instruments and consumables. We have some beautiful examples in areas such as cataract and dealing with brain tumors in Microsurgery also have a very good position in that, where we are already quite close to this strategy to achieving it fully. We're developing currently a retinal surgery workflow with the same ambition level, built on cloud data, built on the most sophisticated software suite in the industry, where a lot of R&D has been invested over the last years. So this is our strategy. It should deliver good results. It should deliver rising recurring incomes, profitable growth in the next years, and market share gains in the ophthalmology and microsurgery field. Spending just a moment on the current environment, on the outlook for fiscal year 24-25, as this video is being recorded at the beginning of fiscal year 24-25. We are dealing with a challenging global macro environment, particularly the markets in Asia, the consumer climate in China, and also some constraints in several health systems on equipment spending. After the relatively good COVID years, with a bit of a drought right now in some of the equipment areas, are presenting a slowdown to growth for us, and did create a difficult 23-24 year with an unusual small revenue decline and a somewhat sharper profit decline in that year. The good news is that we are very confident that we can turn things around during 24-25 on the back of some new product launches, helped by the acquisition we made last year, and also cost-conscious strategy of dealing with R&D, with sales and marketing investment, scaling them a bit back down to the realities of this more muted growth environment that we see right now. We expect the margins to begin to recover as early as the second quarter of this fiscal year. And new product launches will develop some momentum as we move through the year. I hope the next time you check in, we can already show you some of these improved results, and would love for you to be in touch and to have further dialogue on the future of Carl Zeiss Meditec. So until then, thank you very much for your interest and for your support of Carl Zeiss Meditec.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.